Is Bitcoin about to crash back to 20K? Why are the US regulators contradicting one another? And what does the outlook for Bitcoin spot ETFs look like? So on my display right now, I have the Bitcoin US dollar chart open. And as you can see, I have this crazy blue line drawn here. And if you remember this or recognize this, it's because I posted it on Twitter a couple of weeks ago and saying, what would you do if this happened to Bitcoin? Now, the reason why I posted this chart is we did break down from that range that I had highlighted for a while that we were stuck in for such a long time, the range between 29 and $31,500. We were in this range for quite a while. At this point, we were around, the 7 weeks we were in this range. And I said if we did break below this range, it's very likely we'll see some continuation to the downside. And that is exactly what has happened so far. Although I do believe there's still possibility for even more downside, and I'll show you why. The reason being is you'll remember, or you'll notice that I also had this line drawn on this chart here, over there and over there, and that's because we have a bearish divergence between the price and the RSI. So you can see here that we did have a higher move to the upside on Bitcoin, but the RSI wasn't quite as strong, meaning that this move or this push to the upside wasn't quite as strong as the move that we had here, indicating that the rally was losing strength and we could have a push to the downside. Very similar to what happened back here, when we had a lower high here and then a higher high here, but we had a lower high on the RSI, more so on the daily chart. Much more easy to spot on the daily chart when we had that small breakdown, which was over here. So I'll draw this line for you so you can see it. We had over there, and then we had another one over here. So there we had a bearish divergence, very similar to what we had now, and then we had a breakdown back there, because we had a higher high here, but a lower high on the RSI. Now we're having something very similar, except on the weekly time frame now, meaning that there's a high potential likelihood for us to go further down. Now, where that potential downside target is up for speculation, but I'll give you some ideas as to what I'm looking at. So if we measure the previous move that we had on that breakdown there, from the top to the bottom, we had about a 22% move. So should that happen, we have a similar move to the downside from the peak of this. Well, that'll put us around, $25,500, somewhere in that range. And there are some resistances, or at least some supports, that we could hit on the way down. For one, of course, is the 200-day moving average, which is this thick red line that I have highlighted here, at least the 200-week moving average, as well as the EMA ribbon. So the EMA ribbon often serves as support for a rally or resistance as a rally. Depending on which side we break out of that EMA ribbon, there could be more potential downside or continuation of that move. And because we have those two supports coming up, that could put us around the $27,000 region. But if we do break, that's where at least where the moving averages would move to when we get to that price range, probably somewhere around there. But if we lose that support, there's a very high likelihood that we continue back down to the $25,000 region. Now, of course, we could have some movement in on the way down that sort of consolidates to the sideways, just as we did for those 7 weeks that we were in the small, very tight range here before breaking out to the downside. And the reason why I believe that we could have even more potential downside here is because we do have a lot of volume decline. And of course, this is, again, when I mentioned when Binance stopped their free spot trading fees. So that's why we had this huge boost in volume here, is because there was a lot of free trading of Bitcoin going on, at least no fee trading of Bitcoin going on. But there's also quite a lot of FUD on the horizon that we'll get into a second, explaining why we could have potential more downside. And as you know, there's a lot of approvals, or at least requests for approvals of Bitcoin ETFs in circulation right now, or put through. And there's potential for approval, but there's also a high likelihood for disapproval. And if you've watched my previous videos, you'll know that I did highlight every time we've had some sort of Bitcoin ETF approval, or when Coinbase went public and so on, there's been a decline in market price. And this could be due to a shift of value or shift of purchasing power, moving from at least direct spot ETF to then buying through one of these asset managers like BlackRock or Vanguard or Fidelity or whatever, and buying Bitcoin through them. But we're going to discuss some things now as to where this approval is going. And the reason that I'm talking about this is that the SEC told Coinbase to stop trading all cryptos except Bitcoin before suing the exchange. Now, this is a crazy thing to do, because this would harm investors so much, right? Like if you immediately told an exchange to stop trading cryptocurrencies, like all of their currencies, all the people who were holding those assets are going to suffer. Those assets are going to decline in value because they immediately have this very harsh ruling against them. However, we have a very different approach from the Department of Justice, the US DOJ, which is concerned about a run on Binance should prosecutors bring fraud charges. So the officials reported speculated an indictment against Binance in the US could cause a run on the exchange, similar to what happened to the crypto exchange FTX back in November. Now, you guys remember, this caused basically a bank run on the exchange, everyone trying to withdraw their funds at the same time. Those funds aren't there, the collateral's not there, causing an absolute death spiral and a collapse, right? So it's interesting that the DOJ is considering this. However, the SEC, who's supposed to be here to protect investors, is not considering this at all. And they're just going right ahead, balls to the wall, guns blazing, trying to actually hurt investors. Basically, every single move that they've made over the past 2-3 years have hurt investors in some way or another. And it's interesting that they would do this, because if you do look at the exchanges, at least the DOJ maybe is more concerned about Binance because of how much volume is on Binance, or how much of market share trading is happening on Binance. We can see that from the top exchanges. Coinbase and Binance are the two top exchanges in spot, as well as derivatives. I think OKX is second, but Binance is first by a long shot in terms of 24-hour trading volume. So there's a lot of trading going on at these exchanges. So if this were to happen, and let's say the SEC did put something through to force these exchanges to stop trading everything besides Bitcoin, it really would harm investors significantly, really, really badly. So I think it's a good thing that the DOJ is concerned about this. However, it's interesting that they are concerned about this, because depending on like how these regulators are fighting with one another, there's no clear-cut path to what is the best outcome for these things, which is also what I mentioned after the XRP case went through, saying that this might have been a win for the XRP case and maybe somewhat of a win for the whole ecosystem, the whole crypto ecosystem or economy, but everything is still going to be treated case by case. And I can give you an example of that right now, where a judge rejects Ripple's ruling precedent in denying Terraform Labs' motion to dismiss an SEC lawsuit. So Terraform Labs put forward a motion to try and dismiss a lawsuit against them for issuing UST or something like that, based on the ruling that happened with XRP, saying that it's not a security and it's not being traded as a security. But the judge rejected this and said they're not going to make a ruling based on another judge's ruling. It's got to be done case by case. So with that being said, that's actually not a win for the crypto industry at all, because everything now, every single asset, every single token is going to be treated case by case. So one not being a security doesn't mean that another's not security. One being a security doesn't mean that another is a security. So it's interesting what's going on here, because there's a lot of confusion going on with the SEC saying they want them to stop trading everything except Bitcoin, but then saying some assets are securities and some assets aren't securities. And if you see some of the documents put out by the SEC in different cases, or some of the court documents, you'll see that they call one of the assets like Polygon, Matic, and Solana and Cardano a security in one document, and they call them not securities in another document. So they're contradicting themselves even within the SEC. And again, with other regulators as well, they're all fighting with one another, because no one actually has any sort of idea what they're doing. And it doesn't seem like they're willing to work with the exchanges that well. As you guys know, Brian Armstrong, the head of or CEO of Coinbase, founder of Coinbase, he's very willing to work with these regulators, and he's doing his utmost to try and get these regulators to work in a manner that actually helps the industry as a whole. But Gary Gensler has refused to sit down with them and discuss with them. He doesn't want to help the industry for some reason. He's being very, very difficult about it, where they could make this move much smoother and make the whole process more enjoyable and potentially safer for investors, which is exactly what the SEC should be doing. But at the end of the day, they're not protecting anyone. But we also do have the Bloomberg analysts saying that we have better approvals or better odds of approval for the Bitcoin ETF. They increased their chances from 50% to 65%. And the reason they're saying this is because of the SEC's seeming approval of Coinbase's Bitcoin trading platform is one positive indication. Another is SEC's chairman, Gary Gensler, downplaying his role in a recent interview. So this is exactly what I said, where the SEC asked Coinbase to stop trading everything besides Bitcoin, meaning that maybe they are leaning towards Bitcoin being okay to trade and not an issue, and they maybe are leaning towards potentially approving some spot ETFs because they were okay with Coinbase selling this and not operating as an unlicensed securities exchange, but just trading Bitcoin. Maybe in their eyes, they see it as something other or something okay to trade with at least. And with that being said, they obviously believe that the chances of a Bitcoin ETF are higher. Although there are some Downsides to this, like I've mentioned in the past, when we have had ETFs approved, we've had a decline in price in Bitcoin. And there is potential reason for this. It could be maybe even the market manipulation of these asset managers pushing the price of Bitcoin down to make it more attractive to their clients. Because when Bitcoin's high, no matter how much you understand market cap, how much you understand about markets, how much you understand about shares, when something, or at least one asset, is trading at $30,000, it seems like a huge investment to get one. You'll never own one Bitcoin if you don't have $30,000. It's very likely that in the future, very few people will actually be able to hold one full Bitcoin. And with that, it makes it very difficult to sell this product of Bitcoin to their clients. So there could be potential here for market manipulation in the future, where these asset managers actually push the price of Bitcoin down to make it look like more of an attractive purchase or an attractive buy to their clients, so they can sell their own clients Bitcoin through their custody solution, through their spot ETF. So there's a lot of potential here for market manipulation. As you guys know, BlackRock rules the world. If you haven't seen that yet, please go look at my BlackRock video on this channel. But again, completely out of our hands. We can't complain about these things. These powers that are playing in the space now are much bigger than any of us. There's nothing we really can do about it. So if the market does become this huge manipulated market by all of these huge asset managers, so be it. And we have to play the game as best we can, even with all of the AI tech and Aladdin and so on manipulating markets. We have no idea what's going on behind the scenes, but we can do our best. Another interesting thing is MicroStrategy is issuing more shares, 750 million shares to buy even more Bitcoin. So we do have MicroStrategy at this point even operating as some sort of a quasi ETF or proxy ETF. So buying MicroStrategy stock gives you sort of an indirect exposure to Bitcoin, and some investors and some institutions are buying through MicroStrategy or holding MicroStrategy stock to do that. As you guys know, BlackRock is also a huge holder or has a huge stake in MicroStrategy. So again, there's some stuff going on there where BlackRock again controls the world and has access to MicroStrategy. Michael Saylor is a huge Bitcoin bull, as you guys know, buying more Bitcoin no matter the price. Maybe he knows something we don't. Maybe he doesn't. Only time will tell again for that. Another thing is the ETFs. Grayscale argues that the SEC should approve all of the Bitcoin ETFs at the same time. As I said, BlackRock has had, I think, only one disapproval in the past of an ETF request that they've submitted. So it's very likely that they do get approved. And if they do get approved and Grayscale doesn't get approved, even after having BTC and offering some sort of Bitcoin access to Bitcoin to their clients for a long time and being denied an ETF multiple times, it would be very unfair for the SEC to then approve the other ETFs that sort of just came out recently and disapprove Grayscale. So Grayscale's urging, or at least taking them to court, suing them to say that if you do approve all of these and you don't approve ours, this is a huge issue. So if they do win this, it's very likely that all of the spot ETFs get approved very shortly after that, which again, it's a very difficult thing to speculate on whether the market goes up or down. Potentially, there's a huge likelihood for downside there. And again, based on volume, based on technicals, based on just other regulatory issues, we could see potential downside here. Not even just regulatory issues, actually economy issues. As you guys know, the economy is not in the best shape. The US debt ceiling is going through the roof, which again could push even more capital into the crypto market, or at least into Bitcoin directly, because it's the hardest money we have, or at least the most sound money, at least to some extent, that we have. So we could see a lot of issues there based on the economy and people not having capital to push into these rallies, because everyone's expecting Bitcoin to rally up to $500,000 as soon as all of these ETFs are approved. But as you guys know, it's the retail investors that actually cause these parabolic rallies. It's not the sophisticated investors. It's not the institutions. It's not the funds that cause these parabolic rallies, because if they were to do that, they would just be shooting themselves in the foot because they're buying at a higher and a higher and higher price. It's the retail FOMO, the unsophisticated investors that are pushing the price up just purely based out of emotional trading. So potentially this could actually be the start of the multi-decade Bitcoin super cycle, as many talk about, where we have continual steady growth to the upside, not in a parabolic fashion, but a slow growth to the upside over many, many years. And that could be what this flood of Bitcoin ETFs approvals is. We could have this huge slow move to the upside. Another thing, we also have asset managers lining up to file for Ethereum futures ETF. Now, of course, this is not the same as a spot ETF. But again, it is showing that there is potential. Their clients are interested in having exposure to other assets besides Bitcoin. And once Bitcoin's ETFs do get approved, I do believe that we'll start seeing many more of these kind of things happening, where other ETFs are being approved, Ethereum ETFs, altcoin ETFs, because investors do want exposure to these things. Doesn't matter whether they're securities, unlicensed securities, rug pulls, whatever. Investors want to gamble. They want somewhere to put their money. There is a lot of capital out there, and they do want to allocate to this industry because it is a growing industry, and we know the tech behind it. As you guys know, I'm a huge blockchain bull, not necessarily a huge cryptocurrency bull, if that makes sense. Meaning that I believe in the tech of blockchain wholeheartedly, and I think it's some of the best technology we've ever invented as humans, especially when it comes to the trade and exchange of value in society. I think it's one of the best things we have. Although the speculative side of things, that's more just my speculative fun mindset. I see it as a game. I play the game, just as many of you are here for as well. You're here for a financial incentive. You're here to make money, but it doesn't mean that you're not a blockchain bull as well, and enjoy the tech and understand how the tech is actually very, very beneficial for our society. So I hope you guys found the content in that video very, very useful today. If you didn't, I'm sorry, but if you did, please give it a thumbs up and comment down below, "I'm not at home." As always, I shall see you in the next video. Bye-bye.